Ladies and gentlemen, it's about that time of the year when your favorite order blocks stop getting mitigated, your chart pattern do not even align up, and even your favorite engulfing candle just keep failing. I kept missing out on solid trade setup for same reason, guys. So what I did had to go back to what happened during the past 4 months of 2024 and 2023. And what I discovered completely changed how I trade right now. So guys, stay with me to the end of the video because what I'm about to show you right now will help you to stop missing out on high probability setup and can even boost your win rate very, very fast. Without further ado, let's dive into the video for today. So guys, this is GBP USD and which is called the pound USD, and this is on the 30-minute time frame. Guys, let's get onto it. This serious push to the downside, which is an impulsive move to the downside, we know after an impulsive move to the downside, we can mark out our order blocks, and order block happens to be the last bullish or bearish candle before an impulsive move to the downside or to the upside. Inside this region, there is a last bullish or bearish candle before this impulsive move to the downside that breaks structure to the left hand side right here. Okay, so let's mark here to be a break of market structure, and now let's find the last candle inside this region before the push to the downside. So it might be a bullish candle, it might be a bearish candle. Okay, so now the last candle, so now this bearish candle right here happens to be the last candle before price start moving to the downside. So you have to mark it and extend it to the future, waiting patiently for when price is going to revisit there later on so you can start shorting the market. But what happened right here is that price did not get into your gray area, which happens to be your POI, which is a point of interest, before the market starts splashing crazily to the downside. This is just the first example. So now let me walk you through the second example. Coming to the second example right here, we saw that in this region right here, there is that last bullish or bearish candle before price turns to the downside that breaks structure to the left hand side, which happens to be here. Okay, so this is a valid break of market structure. So now let's connote here to be US, which is your break of market structure. I believe that's clear enough. Okay, now let's get rid of this guy and let's get rid of this guy. So now let's mark out the last candle, guys. It might be a bullish one, it might also be a bearish one. Now in this case, it happens to be a bullish candle, so it's this candle, this one right here. You have to mark the whole of it from where it opens to where it closes, the whole of it, even with the wick, you mark it out. Guys, I'm really sharing a lot right here. All I ask in return is for you to just like, subscribe. Please, guys, share this video to your friends so they don't miss out on good setup. After we marked out that our order block right here, what happened in this case? Price did not get into our POI, which happens to be this gray area, before we see the market start dropping to the downside aggressively. Now, as if that wasn't enough, what happened again? We saw that on this region right here, there is an order block that caused the market to push to the downside aggressively that breaks structure to the left hand side. So we have a break of market structure here, which is a very, very valid one. We also have another meaning break of market structure right here, which you can see clearly on the 15-minute time frame. Okay, so it is a break of market structure. And now let's get rid of this guy and also this guy so we can be able to spot out our order block, which is, so now this bullish candle happens to be that last candle before price start moving to the downside. So you mark the whole of it, you mark it. So this is what we call a valid order block. But what happened right here? Price did not get into our gray area before the market start dropping to the downside crazily. These trade setups that you miss can even take your account from 0 to something really, really tangible. I'm not saying 200%, 300%, 400%, okay? I don't like to sugarcoat things. I like to tell them the real facts about trading. How are you going to avoid something like this? How are you going to stop missing out on good trade setup that can turn your trading account into something really tangible? Guys, let's dive into it. Now, I've wiped out all the markup previously, what you've been doing wrong previously, we've cleaned it up. Now, let's refine all those things. What I mean by refine, we need to start looking out for what we call liquidity order block. I keep singing it on this channel, that liquidity order block are those candles that take out liquidity before that impulsive move to the downside or to the upside. You'll find out that before price start moving to your direction, it has to clear out some people. This double top right here is called what? It's called where liquidity is seated at. And if you can look closely, let me zoom this thing out, guys. If you can look, which of this candle take out these orders that were sitting here. A lot of people were shorting the market right here. You can see a lot of short right here. But before we know, we saw candles start bulling to the upside before we have this strong bearish movement to the downside. So we're going to look out for that candle that caused all the SL that was sitting here being liquidated before price start pulling to the downside. Let's find that candle. The candle happens to be this candle right here. It happens to be this candle. Not just here, but also here as well. We can see if you go on the smaller time frame, you find out that also a liquidity right here. You can see that this candle right here was the candle that take out this liquidity and also this liquidity. You have to mark out that candle from the bottom to the top. You extend it to the future, waiting patiently when price is going to get there next. I have to name it to be LQD, which is liquidity order block. So now this candle, this bullish candle happens to be the candle that take out this liquidity before price start moving to the downside. This is a bonus. Okay, this is a bonus, guys. If you do this thing, you hardly miss out on trade. You hardly miss out on trade, especially during these last 4 months or last 3 months before the year wraps up. So when I check my journal, what I usually do is to combine that liquidity order block with also a fair value gap. This is the reason why I told you that this is a hybrid system. So you have to mark it out to be the same thing with this fair value gap. Okay, see, there's a fair value gap right here. There's an FVG right here. You mark it to be the same. So if you have to calculate what is the stop loss range, you can see that the stop loss in pip is not much. This is just 22 pip stop loss. You can afford that as a day trader. All you have to do, you have to extend it to the future, waiting patiently when price is going to get there next. You can see that we did not only mark out a liquidity order block that caused this catastrophe and price start dropping to the downside, we also mark out a fair value gap. So this is a confluence of liquidity order block and also fair value gap. This is where you'll be waiting patiently. Price mitigates here, very, very sweet and nice. And you keep your stop losses around 23 pip, which is okay as a day trader. And where you want to catch, maybe 1:2 or 1:5. So this is a clean 1:3. This is the second example. Remember what we did the first time? The first time we look out for the liquidity order block and also we combine it to a fair value gap. Here we saw that price push to the downside and break structure to the left hand side. Okay, so this is a valid break of market structure right here. We understood that, right? So now let's mark out that liquidity order block. So now where is the liquidity order block? Firstly, we have this high right here and price had to take it out. So let's mark it to be liquidity. So now which candle blast through that high? What was the candle that blast through that high? It was this bearish candle. It was once as bullish as this. Then the bears came into the market and pushed price to the downside. So you had to mark out the entirety of that candle. So you mark it out. Everything. So you notice to be LQD, which is liquidity order block. Then you extend it to the future right here. You can see how beautifully price came back there and mitigate you right here. And you have to keep your stop losses to be maybe 20 pip, 25 pip, 30 pip, as the case may be. Okay, you can do 20 pip. So this is just 21 pip. This is just 21 pip. Being it's 21 pip, and you have to catch maybe 1:2 or 1:3. You can see that in this case right here, we use only the liquidity order block because the FVG that was here has already been mitigated. The FVG that was here has already been mitigated. Guys, let me take you through what happened on BTC USD on Friday, and a lot of people miss out on those trades. So this is BTC USD. The first thing you will do, you have to check out if there is an order block that grabbed liquidity previously. So now this happens to be a previous high that market had to take out. So you have to know this one to be the liquidity order block. Now let's mark out the liquidity order block. So this is the candle right here that grabbed liquidity. Extend it to the future, then you note it to be liquidity order block. We can see right now that we also have a FVG, which is a fair value gap right here. So all you have to do, you have to combine them to be the same thing. Okay, merge them to be equal. So after you merge them to be equal like this, then you extend it to the future, waiting patiently for when price is going to get there next. The stop losses are huge, but then again, this is BTC USD. You're not here to put in 20 pip stop loss, 25 pip stop loss. No, depends on your risk appetite because of what you're catching, and this is what you caught, about 700 pips. An order block that grabbed liquidity previously combined with FVG to be your point of interest from now until the end of this year, because during this period, market tends to move very, very fast and your strategy you've been using from January, February, March is still going to work, but chances of it to work right now is like 50% to 40% because of how markets move during the end of the year. Thank you guys for sticking around. I've really shared a lot right here, guys, and I'm going to be seeing you guys on the next one. Bye for now.